All right, good evening, everybody. It is October 20th, 2022. Boy, do we have a lot to talk about tonight. Now, the markets got hit. We had a couple notable earnings reports after the bell, most notably Snapchat, ticker symbol SNAP, down about 26% after hours off of a pretty steep revenue miss. But besides that, I really wanted to do a deep dive into the report because there was something very interesting that the CEO of Snapchat said on the call, and that was in relation to a lot of their advertising activity. So as they were talking to a lot of their advertisers, one of the things that they're seeing is that across the board, not just selectively located to a few advertisers, but broad-based across the board, it seems as if a lot of advertisers are pulling back on advertising revenue. So what does this mean for next week when we have big companies that rely heavily on advertising revenue, such as Meta reports? I think that's going to be pretty, let's just say pretty ugly. Now, we did get some important housing data today. The National Association of Realtors reported their existing home sales data for the month, and existing home sales fell to a 10-year low in September. Now, we were talking about this a little bit last night. We knew the numbers were going to be egregious. Obviously, that's the 30-year fixed rate mortgage is right at around 7%, so absolutely killing off demand. So we're going to take a deep dive into that report, and I think everybody on this live stream, podcast, whatever you want to call it, is going to be pretty interested to hear about some of the supply issues we're having in the market. Now, we understand that sales, transaction volume has fallen off a cliff, right? However, we just don't have an uptick in inventory. Supply is still relatively low, so we definitely need to talk about that. We're going to take a quick look at futures, and then we are going to actually be walking all the way up to the Met Museum on the Upper East Side. I think that's going to be a nice place to do the live stream. Haven't been there in a while. So if we look at the ES, the ticker symbol for the E-mini futures contract on the S&P 500, we're down about 11 points to 3,663. If you go to the NQs, which is the ticker symbol for the E-mini NASDAQ futures, NQ, we're 11,013, down about 77 points. And then last but not least, the YM, which is the E-mini Dow, down about 33 points as well, to 30,320. So before we actually get started, can everybody hear me okay? Can everybody hear me okay? Because I did buy the microphone, so we should be good with the microphone tonight, but I'm not sure. Maybe it's coming through bad, it's coming through good. So give me a thumbs up or thumbs down in the chat if you guys can hear me. And we will get started. Hopefully everybody had a good Thursday. We are coming into the tail end of the week. Boy, is this week flying by fast. Sabrina Ferris's volume is low. Yeah, maybe it's just because of the mic. I think the mic tends to muffle the volume a little bit. Sounds low. Copy that, 10-4. Let's see who we have in the chat, and we'll try to figure out these mic issues. But I see my friend Otto is here. I see Horatio Snipes, Aaron Frazier, the one and only Sam, Paul Greenwell, Arctic Tren is here. Good to see you. Patricia Ivory. Donna California is here. Sabrina Fair. Siva, the British Grey Rocket. And we have John. But it's good to see you. Thank you so much for joining tonight. It's good now. Yeah, maybe, I think it's just we got to get used to the microphone again. So I'll tell you a quick story about the mic. And this also has to relate back into the financial talks that we always have. So I go to the Apple store today. And I go to the flagship Apple store, if you could call it that, on 5th Avenue, right? So the main one near right across the street from the Plaza Hotel. So I go in there and it's absolutely packed. It is so mobbed in there. And I'm thinking to myself, obviously this is a piece of anecdotal data, but if you think about it, we're in a recession, right? We've been getting hammered with round after round after round of bad economic news relentlessly all week. I go into the Apple store today and the place is absolutely mobbed. I mean, I'm talking about, it took me probably almost 35 minutes just to check out. And the only thing I bought was a little dongle to connect the mic to. I don't know, a little bit of anecdotal data there, but it seems like business was booming there. And people were actually buying laptops, people were buying iMacs. So a lot of sales transactions going on there. Now, granted, that is the flagship store, right? So they tend to do more transaction volume. It tends to be a big tourist attraction in general for people that want to come to New York and buy something at the Apple store. But just thought I'd throw out that little piece of anecdotal data there. Yeah, Julia Ems has told you last night that luxury items are selling. Yeah, I mean, I agree with you. I think we're seeing this sort of decoupling, if you will. You know, we always talk about our theory that the Federal Reserve has created somewhat of a two-tier society, right? The extreme haves and extreme have-nots. Now, speaking of that, the LVMH brands, which is like the Moet Hennessy brands, they actually gave out some revenue guidance and financial reporting on October 11th, and they posted really, really strong numbers. So to Julia's point, it seems as if the luxury market is holding up rather well. Hey, Buff20 says, hey, Tom in chat. Hey, I got my mom visiting. Can you give her a shout out? Her name is Helen. Well, good to see you, Helen. Thank you for watching Walks on Wall Street. And hopefully you're enjoying the live stream tonight. Rich K says, recession is a state of mind. People who have no change in their economic situation stop buying. It's an interesting point. Donna says, the youth that work and reside with parents have money. Maybe. Miss Brown Eyes is here. Good to see you. William Brooklyn is here. Says daily check-in. Good to see you, William. Sabrina Fair. Monique. Good to see you. So there was a big Market Watch article that came out. Not sure if you guys saw it. I think I may have or I may not have tweeted about it, but Bank of America is warning of a global bond market crisis. So a freeze up in the bond market. And it's interesting that they're talking about this now, because on the live streams, we've been talking about this almost every day, right? The number one thing I say is, look, if you want to know where the equity market is going to go in general, you got to keep your eyes peeled on the bond market. That's the most important thing. And every single day so far this week, it's just been absolutely relentless selling in the debt market. You know, you look at the 10-year US Treasury yield, I think we're at 4.2%. So really, really drastic moves in the bond market. And it's not looking good, because this could potentially lead up to a pretty big liquidity crisis and a credit crunch, which would definitely not be good. Sort of getting almost like 1987 type vibes here. Yeah, Mike C says, look what the bond market did to Liz Truss. Yeah, so speaking of Liz Truss, I think she was in office for what, 45 days? Is that a record? And supposedly, I think she met the requirements that she'll get her basic salary for the rest of her life. And I think she only worked for 45 days. Kind of just unbelievable, crazy macro events are going on. Unbelievable. RS is here, says no bueno. Good to see you, RS. Thank you for joining. JR, welcome. Good to see you. Dan says, Tom, have you ever traded any fixed income securities? I have not. Now, that's a good point you bring that up, because yields are getting really attractive. You know, I think I posted a screenshot on my Twitter today. The 10-year US Treasury yield, the 2-year yield. You know, these yields are getting pretty attractive now, actually. So I'm gonna have to look into it. Hey, Julius, this is Tom. I bought the 10K I bond. Great to hold on a year or so at basically 7%. So Julia, I think the I bond is what? Almost 10% yield on that. Now, granted, you are limited to, I think, $10,000 worth of purchases a year. But to your point, I mean, technically, risk-free rate of return, right? Not too bad. So we're standing here on 57th Street, Billionaires Row. We are looking at the Steinway building right now. And we are also looking at Central Park Tower and 157. Hey, we have Samantha R in the house. Good to see you, Samantha. Welcome. Thanks so much for being here. Susanna H is here. Welcome. Dan Zhang says, me too. I'm thinking about investing into TLT, which is the 20+ year Treasury bond ETF. Yeah, I mean, look, I don't think I'm gonna get involved in that yet. I mean, look, if you pull up a monthly chart of TLT, I mean, that thing has just been getting absolutely blasted, hammered. And there's an old saying on Wall Street, buy bonds, wear diamonds. Has anybody heard of that? Has anybody heard of the saying, buy bonds, wear diamonds? Now, that really hasn't played out this year, has it? I mean, bonds have been just getting absolutely crushed. Bank of America has finally come out here warning about a forced selling event in the debt market. And when yields spike uncontrollably, right? When you have an uncontrolled sell-off in the debt market. Oh, we got Dan Zhang's Ferrari out here. Wow, you know, I'm not a big car guy, as you know, but this thing looks crazy in person. It looks awesome. They're very brave driving that thing in the city with all the potholes and all the crazy drivers. So I guess I'll ask the chat, if you guys had, maybe some of you do have a Ferrari, would you drive it in the city? I don't know. I think I'd be a little bit paranoid, honestly. Never know. But look, I mean, that's my biggest concern, right? And I'm actually a little bit, I wouldn't say a little bit, I'd say a lot nervous. I'm very, very nervous about the debt market. Because if we continue to have days like today, where the bond market continues to sell off and that 10-year US Treasury yield spikes, well, this is going to be a big problem. I mean, you could see stocks absolutely get their faces taken off. I mean, they've already had their faces taken off, but this could be a pretty bad moment here. So I think the central banks around the world are going to need to do something. I think they're going to need to do something here. Whether that's QE or something, I just think that, yeah, I think they're going to be forced to do something. Let's just say that. Dan Zhang says actually a Ferrari is more drivable in the city than a Lamborghini. Interesting. Fort Lace says, hello Tom, I am here from Brazil. Good to see all of our Brazilian viewers. Welcome, guys. So we are standing on the corner of 57th Street and 5th Avenue, right outside the Louis Vuitton store. And right across the street from the Tiffany & Co. Now, Julia made a really good point in the chat, right? Saying that the luxury market is still holding strong. And about 2 live streams ago, I gave you guys a story about my neighbor who is a VP or vice president at Tiffany. And one of the things he said to me, he's like, Tom, every single month I tell myself it's gonna stop. He's like, it's gonna stop this month. It's gonna stop, it's gonna stop, as it relates to spending. And he's like, it just doesn't stop. He's like, these people are coming in, they're ordering custom jewelry, they're spending big money, they're blowing it out. And he's like, it just doesn't stop. So I did some digging, and I actually was listening to the earnings call of LVMH. Hold on. We got the derelicts roaming 57th Street. Moet Hennessy, and their earnings call was absolutely spectacular. They're seeing double-digit growth across all of their main brands, right? Now, LVMH owns a ton of brands, right? Big luxury brands. And every single segment of the business saw a double-digit revenue growth for the quarter, year over year. And this is in an environment, right, when supposedly we are in a recession. Now, granted, they have global market share, right? I think their number one market for sales is Asia. Now, they did hint to some of the COVID lockdowns pushing the majority of the sales in Europe and the United States. But still, even with the zero COVID policy in China and other parts of Asia, sales blew the doors off. So I always say there's always a bull market somewhere. You just need to know where to look. I think the bull market is still raving strong in the luxury brand space. What do you guys think? Hey, Silvio is here. Says hello, Tom and everybody. I am from Brazil. Well, thank you for joining. You know, we do have a lot of Brazilian viewers. I've been looking at the YouTube analytics, and we have a ton of viewers from Brazil. So thank you, everybody from Brazil who's been watching the channel. I appreciate it a lot. I see Sunshine After Rain is here, the one and only Penelope from Tennessee. Welcome. Lee says, good evening, Tom. You are well. 3 prime ministers in 2022. No wonder the economy is a mess. Yeah, I mean, we thought 2021 and 2020 were crazy. But yeah, Liz Truss is officially out of the game. Now, does anybody know, because, you know, in full transparency, I don't really know how how it works over there, but supposedly Liz Truss, since she reached the 40-day threshold, now is it a 40-day threshold or is it a 30-day threshold? In any event, maybe somebody from the UK could chime in here. I think she gets to keep her basic salary in perpetuity forever, right? I guess it's like a pension type deal. Now, again, I'm not hating on it. I mean, look, you deserve it. That's what you get it. Dan Zhang says, I think budget gyms like Planet Fitness will also benefit. Ticker symbol PLNT. You know, Dan, it's funny that you say that. So during the COVID crash, right, of 2020, one of the first stocks I bought back was Planet Fitness. Now, I don't have a position anymore, but that was one of the first stocks that I bought back in the latter part of 2020. But I think it's a good thesis. I think it's a good bull thesis. Look, I mean, if we really do, I mean, let's just state the fact here. I think we're in a recession based upon the 2 negative quarters of GDP growth. I understand that there's many nuances, but then again, I don't view it as a political issue, right? So I believe that we are in a recession, but if the experts, the quote unquote experts here, actually come out and officially state that we're in a recession, people get laid off, job losses across the board. You know, I think to Dan's point, people are going to look to cut costs. And a $10 gym membership is, you know, probably not what's going to be cut. If anything, people are going to be cutting their Equinox memberships that are like $200 and going with something more affordable like Planet Fitness. Hey, Alien Guru, thank you so much for the $2 donation. I appreciate the support. It says, have a hot cocoa. Thank you so much. Appreciate it. GX72 is here, says howdy. We're going to be doing a deep dive into Snapchat's earnings report that was absolutely, I would say, a disaster. Now, the stock's down big. It's down about 26% after hours. And just think about the velocity and the ferociousness of this sell-off, okay? So Snapchat went from a $90 stock all the way down to an $8 stock. And this is why I sort of focus in on, as we're doing these live streams, and focus on the channel that, look, you gotta have risk management. Now, a lot of people will say, you know, the stock's down 80%. Well, how much further could it fall? Well, my answer is I don't want to be around to find out, right? I always say that. Well, the answer is it could fall another 100%. So in this environment, what we're seeing with these very frothy high beta names, like Snapchat and the like. And I'm not just trying to pick on Snapchat. The only reason why we're talking about them is because they reported earnings today, right? So in the environment of higher interest rates, the first stocks to go are the money losers, right? The companies that were only focusing on top line revenue growth at the expense of profitability. Now, when interest rates go up, investors are like, look, we don't care about top line revenue growth anymore. We care about earnings. And I think the reason why Snapchat really got hammered is because the growth story for Snapchat was the revenue growth. And we are seeing substantial deceleration in that revenue growth. I think they only reported about an 8% year over year revenue increase. And that was the first time revenue growth dipped below the double digits since 2017 when they went public. So if your thesis or your story that you're trying to sell to investors is we're a growth company and your revenues are decelerating, well, what does that say? So we'll go into it a little bit. Hey, Got Yours is some of these social media companies really should have thought of ways to monetize their service before they ever put out apps. So Got Your, I think you make a good observation there. Now, it's sort of funny that we're standing outside of the Apple store, right? So I'll point to the Apple logo when I say this. Apple is one of the main reasons why you're seeing a little bit of an implosion in the price of Snapchat. Now, Snapchat is not the only company that was hurt by the new iOS update for security reasons that was enacted last year. You know, Meta, Facebook is being impacted by this. Alphabet, Google is being impacted by this, but they have a little bit stronger brand recognition in the marketplace, and they have more average daily users, right? Meta and obviously Alphabet, so they could weather the storm a little bit better. But ever since Apple enacted that security update where Snapchat can no longer track users across the internet and targeted advertising to them, that really put an impact on their advertising revenue. So I think it's a good point. Hey, the ABX girl is here. Good to see you, ABX girl. Thank you for joining. Steve CR says, man, I'm liking this New York City tour. Day after I get to see what New York City is like besides good business conversations. Thank you, Steve. I appreciate it. I appreciate that. The ABX girl says you can get an Equinox discount with your HR department. I wish I had that. Alan says walks from Wall Street, the best place to learn today's news and finance. Thank you for all you do. Hey, thank you, Alien. I appreciate that. So check this out. I'm gonna pull something out of my pocket here. I wanna show you guys before we leave Apple. But this is what I bought today. Look at this. I bought this. I'm not sure if you guys could see it, but it is a lightning headphone jack. This little teeny thing, okay? Now, could anybody guess how much this little teeny thing cost me? Anybody could take a guess? For just this little adapter, I think you'd be surprised at how much it costs. But in the meantime, I'm gonna give you guys a really nice view of 432 Park Avenue. Absolutely beautiful building here on Billionaires Row. Oh, whoa, these are big numbers here. No, not $70, not $20. Wow, you guys are shooting high. Carter J. Hall, what's up, man? Good to see you, Carter. Yeah, Teresa Diaz got it, $9. I think Teresa cheated a little bit because she saw my Twitter post about it. But that little thing is $9, $9. Now, I would also like to say, I also had to buy a charging block that connects via USB Type-C. And that was $29 just for the charging block. And it took me about 35 minutes to get out of the store because it was filled to the rafters. Now, I posted a pic of this on Twitter just for some anecdotal data, sort of market research. And I'll repeat one more time. We're in a recession, right? Technically. But the Apple store was filled with people buying all types of goods and services, like laptops. People were walking out of there, iMacs, iPhone 14s, and accessories too. People were just walking in there buying AirPods. Now, I know this is a high volume store, but still, I mean, I was stunned by how many people were in there. Donna Elsa's 149. Hey, Monique is here. Good to see you. So everybody's guessing really, really high, but honestly, I think that $9 for this little thing, like, guys, look at it. It's just a little adapter for the headphone jack. $9? That's crazy. I don't know. Maybe it's just me. Deep Value Alex says, did you guys know Steve Jobs faked the iPhone at first? Apparently it was full of bugs. I did not know that. Interesting. Very interesting. Yeah, Andre Almar says Apple is always packed. Yeah, you know what they say, during recessionary times, you want to look to own the companies that could maintain their gross margins and that have extraordinary brand recognition. Double Eagle is here, says people just came out of a once-in-a-century pandemic. They are not sweating a recession. That's a very underrated comment from Double Eagle. Very underrated comment. And I think you're 100% right. We just went through the most crazy experiment probably that anybody's ever lived through in their life. So check this out. This is a view of the One Vanderbilt building. But everybody was essentially told to stay home for 2 years. And now once, the vaccines are rolled out, everybody's pretty much back to normal. Everybody just wants to go out and do what they want to do, right? Everybody wants to go out, hang out with friends, grab coffee, travel more, right? Now, one of the interesting things that we've been seeing out of the consumer spending data is not necessarily that consumers are spending less, right? In many instances, consumers are actually spending more. However, I understand the inflation ramifications of that, but the point I'm trying to make is it's just the shift in what consumers are actually spending on, right? So to your point, back during the pandemic, everybody was forced to stay home and order goods off of Amazon, watch streaming services like Netflix, Hulu. But now we're actually seeing a massive uptick in travel. Now, we've heard from a broad spectrum of airlines. So a lot of the airlines reported earnings this week. And one of the most notable things that came out of those reports for me is that business travel is almost 100% back, which was actually quite surprising to me. But business travel is almost 100% back, and it's projected that this holiday season, when you're talking about Thanksgiving and Christmas, could be the most traveled holiday season in the United States on record. Okay, and this has actually been my thesis. I think I actually said on the stream, here, I'll show you guys the IBM building. Everybody always loves to check out the IBM building. I think I actually said on the live stream, podcast, whatever you want to call it, that I believe that this holiday season will be the most traveled holiday season ever in the United States. And the reason why I think that is because look at the data that we just got out as it relates to past 2 years. Okay, just in my life, I didn't see my grandmother because you're kind of iffy about, the COVID thing. Maybe some family members aren't comfortable getting together at the time in 2020, which, it was understandable. But now I think that's pretty much over, right? I mean, I don't want to speak for everybody in the chat, but would you say, and again, I hate putting words in other people's mouths, so I'll just speak for myself. For me, it's almost just like a non-issue anymore. I don't even think about it as it relates to holiday travel. I'm going to see my brother, my sister, right? Probably stop by my grandmother's house. And the worry of that, the big C, is really not as egregious as it was before. So I think travel is going to be absolutely massive this holiday season. Janine says, I don't see anybody traveling. Interesting. Emmanuel Sanchez is here. Good to see you. Always good to see you, Emmanuel. Melissa says, I have a job market question. I have tons of sales management experience, but no software SaaS experience. I am trying to break into SaaS market. Where should I apply? Any suggestions? Yeah, Melissa, I think that you should just apply to a broad-based range of SaaS companies with a focus in cybersecurity. Okay, now I've always said, and for those of you who are new to the stream, that's what I am. I'm in tech sales, software sales, in general. And if I had to do it again, right? So if I was just getting out of college or in college, I would say, look, you got to follow the big thematics, right? So on this stream, we always talk about, as an investment thesis, the number one thing you look at is the big TAM, right? I want to look at the freaking massive ocean of opportunity out there. And in my view, that's cybersecurity, okay? We are in an extreme bear market as it relates to the equities market, but we are in a raging bull market as it relates to cyber crimes, unfortunately. But that's just the reality. And we've been talking about this pretty aggressively on the live stream. So if I had to do it again, I would apply to be an account executive and try to work my way up to enterprise account executive at some of the largest and most successful cybersecurity companies, such as Palo Alto Networks, Zscaler, and CrowdStrike would probably be my top 3 choices. So I would say, yeah, apply to a lot of these software companies. I think if you're going to work at a startup in this environment, I would be very, very careful, right? I would ask a lot of questions when you're in that interview to see what the financial health is of that company, because at the end of the day, a lot of these unprofitable or not profitable tech companies in this environment, they're going to start to lay off a ton of people, and I mean a lot of people. Patent Lobster says CrowdStrike is an awful software, by the way. Andre Almar says, Tom, your thought applies even for technical roles or just for sales? What do you mean? Yeah, I mean, I would want to work at a company, right? Because just look at the environment we're in. But real quick, I'll show you guys 432 Park Avenue. We're here. Look at the environment we're in, right? We are in an environment where interest rates are going up, okay? Which means by and large, generally, equity valuations across the board are gonna come down. Specifically as it relates to a lot of high beta, high growth SaaS companies that were predominantly focusing on top line revenue growth. Okay, well, that may have been a good strategy when interest rates were 0, right? A lot of these companies were only solely focused on top line. But in an environment where interest rates are increasing, those stocks are going to take the largest beating, right? So I think a lot of people sort of get confused. The stock is not necessarily the company. So I think if you look at, across the board, pretty much all these stocks we're talking about, or all these companies we're talking about, like Zscaler, I think that's down, maybe 60%, CrowdStrike maybe down 70%. I think Palo Alto Networks is holding up a little bit better, but I think that's still down 35%. The point I'm trying to make is, I think in this environment is not the time to be a hero and go work at a startup that's burning a lot of cash, because if we do start to see massive amounts of layoffs across the board, it's going to impact those companies first that aren't generating any free cash, that aren't profitable. It's going to be the money losers, right? So that's sort of the point I'm trying to make. So if we do go into a recession, and the experts call the recession to be a true defined technical recession, you want to work at a company that's going to be the most recession proof, whatever that means. And if I was a chief technology officer at a major company, and I was going to look to cut costs, well, maybe I would cut costs, I would cancel my Qualtrics, type of software. But do you really think I'm going to cancel my cybersecurity software, right? Especially maybe if I have like a zero trust type architecture from Palo Alto Networks. That's probably going to be the last thing I'm going to cancel. If anything, I'm probably going to spend more money on cybersecurity software and cybersecurity infrastructure and have a mass culling of all the other stuff. But that's sort of, I guess, my thought process there. So we're outside of the Ferrari dealership here on Park Avenue. Wow, look at the bright blue color of this one. This is crazy. I think we were here 2 days ago and there weren't any of these cars here. Yeah, Miss Brown Eyes says we got to slow the chat. Yeah, I think I'm gonna have to put on what is it called? Slow-mo or something? Slow mode. Mike C says, Tom, have you seen the electric Rolls Royce? I did see that. And supposedly the demand is extremely high too, from what I read. All right, let me try to catch up on the chat here. Hey, Irish Dylan is here. Says currently booked my holiday for Palm Beach, Florida. Wow, that's gonna be really nice. I should be back in Miami November 1st. Jay Peaks says walks from Wall Street. Explain the 6-month wait for a Tesla or 100K pre-orders for the electric F-150 Lightning. What do you mean explain it? Hey, the RT440 says, Tom, what do you think the Fed is going to do with rates at its next meeting in November? Well, I think the Fed is going to be forced to raise another 75 basis points. I think they've been pretty clear in saying that. Now, usually leading up to these meetings, right, hearing from the Fed, let me just give you guys a shot of this building here on Park Avenue. I think it's one of my favorites. One of the things that I think we see, and we've been seeing, is the Fed floats out all these Fed presidents, right? And they start to make these comments. I think Neil Kashkari spoke maybe in a CNBC interview or Bloomberg. I read an article. And now Neil Kashkari is the Minneapolis Fed president. And he says that so far interest rates have not had a material impact on inflation. So he said that they're going to in turn raise rates even more. Now, I think if you really wanted to be effective on killing inflation, you would work to reduce the money supply. But I think we're going to get a 75 basis point rate hike in November, right, to cut right to the chase. And I think we're going to be at a 4.25% to 4.5% Fed funds target rate by Q1 of 2023. That's where I think we're going to be. And I think the market still has lower to go, right? The number one rule is don't fight the Fed. The Fed has literally told us that they want to kill jobs. They want the unemployment rate to go up. They want people to lose their jobs. And they want to use their words, not mine, to create demand destruction. To use the words of Fed Chair Jerome Powell, they want that. So I think we're going to be in a risk-off environment until then. But what do you think? What are your thoughts on that? Melissa says, hey, Tom, all the Fed stuff could have been prevented. Yeah, I mean, I think what you're seeing right now, right, and let me know if you guys agree or disagree, you're seeing an unwind of about a decade of quantitative easing. We're unwinding about a decade of QE. Ooh, that was almost an accident there. Hey, Rick K is here. Says great comment to reduce the money supply. That is the problem. Good to see you, Rick. Richie is here. Says inflation is a real issue in America. Let not rush. Push it under the rug. We love Wall Street. Be safe. But let's be realistic. This is Richie. Yeah, I agree. Inflation is a huge issue. Now, sort of my stance on inflation, and then we're going to jump into Snapchat's earnings because I think this is a big deal, and you guys will sort of see why. Now, my issue with inflation is that it really hurts the lower class and the middle class, and especially people who are living on a fixed income, right? Let's talk about if you're retired or something like that, right? You're living off of Social Security, you're living on a fixed income. You know, if your grocery bill is going up by $50 a month, that's literally cataclysmic. Now, it may not sound like it, but if you're living on a fixed budget and you're spending $50 more a month on groceries, that could potentially mean the difference of having to choose between paying your electric bill and feeding yourself. And if you're watching the stream and you think that sounds a little bit dramatic, it's true. It's true. So I think the one thing that I agree with Fed Chair Jerome Powell is he's like, we cannot afford, and this is the Seagram building, by the way. This is one of my favorite buildings in the entire New York City, the Seagram building, right here at 375 Park Avenue. It's absolutely gorgeous here. Where I do agree with Fed Chairman Jerome Powell is at the last FOMC meeting, he actually said that we cannot afford to allow inflation to get out of hand because that crushes people that are living on a fixed income in the middle class. Now, if you're in the upper middle class or the upper class, I would say the upper 10% of Americans, is inflation tedious? Yeah, I would say it is. Is inflation a little bit of a pain in the you-know-what? Yeah, probably. Is it a little bit monotonous and it's a little bit of an inconvenience? For sure, absolutely. But is it manageable? 100%. It's not the end of the world. It is the end of the world for a lot of people that are living on a fixed income and that I would say are probably making less than $50,000 or $45,000 a year as a single income earner. That's the issue. So inflation needs to come down. It has to come down. The bond market is signaling that inflation is going to fall off a cliff by next year. I hope it's right. Because we just can't afford it. We can't afford to have inflation run at 9%. This is Blackstone over here. They actually just reported their earnings. Their earnings were down materially due to lower than average or lower than expected returns in their private equity portfolio. Rich K says, Tom, how much has the money supply increased since the beginning of the pandemic? By about 5 trillion. Yeah, I think that's exactly right. Well, I think the Fed's balance sheet has ballooned to about 8 trillion. Hey, MSK is here. It says, hey, Tom, what do you think about high household savings rate during the pandemic? Do you think it'll make lowering inflation harder? I don't. If anything, built up savings. Stanley Druckenmiller came out a couple weeks ago and did an interview talking about this exact thing. And he said, because I guess the topic was the resiliency of the U.S. consumer, right? They're like, how much more can the United States consumer take with battling all this inflation? And Stan Druckenmiller said that Americans have about $2 trillion in collective savings from the pandemic, and it's probably going to take a couple quarters to erode through that or work its way through. And that is when he thinks that the real sort of demand destruction that the Federal Reserve is talking about is going to come into play. And I think I would have to agree. Q1 or Q2. But what are your thoughts on that? This is Blackstone here, right here on Park Avenue. Hey, Dirk Diggler is here. Says, hey Tom, great stream, sick views tonight. Thank you, Dirk. We are walking down Park Avenue. Now, I think I actually said at the beginning of the stream we were going to go to the Met Museum.
I'm giving you an opportunity to show us.
But we actually went the complete opposite way. Hey, I see my friend Chris Beeman. Good to see you, Chris. Thank you for joining. Trust you're well. Let's talk about housing for a little bit, and then let's talk about Snapchat, because I think Snapchat is going to be a precursor to Meta's earnings report. Now, I am going to ask for your guys' help with this. So as of now, I forgot to check. Is Meta stock down after hours? Could anybody quickly do a Google search on that? Is Meta or the Trade Desk, are those two stocks down after hours? I forgot to check. Michael Joseph says Blackstone is a juggernaut. Good to see you, Michael. Okay, so people are saying yes. By how much, if you don't mind me asking? How much is Meta down after hours today? Hey, Golden's Dawn is here. What's up? Double Eagle says yes, Meta is down 4%. Yeah, so Meta is down 4%, and here's the reason why. Meta didn't report earnings today. Meta reports earnings this time next week. But Snapchat reported earnings, and I want to read you something from the earnings call. So I was on the earnings call, and I want to read you guys something from the earnings call. Can I do that? I think we'll do that now. All right. So this is important. This is big stuff. So here's what the CEO said on the earnings call. He said, our advertising partners across many industries are decreasing their marketing budgets significantly, especially in the face of the operating environment headwinds, increased inflation, and the rising cost of capital. And Snapchat's revenue was down significantly, but they did beat on EPS. So if the CEO of Snapchat is forecasting, as we're walking under the scaffolding here at Waldorf Astoria, that all of their advertising partners are reducing or slashing across the board their advertising and marketing budgets, what do you think that's going to mean for Meta's earnings report next week? Right? So a lot of these social networks, right, rely heavily on advertisers or advertising spend. You know, I actually wouldn't be surprised if Alphabet or Google, ticker symbol GOOGL, was down a little bit after hours too. Now, I will also say this. I'm not a Snapchat user, so I don't really know about the platform. Maybe some of the people in the chat could chime in about this, but Snapchat's management is trying at least to get in front of this, right? They know that their advertising business, or in general, I would say, let's talk about more broadly. More broadly, Snapchat has had a very, very difficult time monetizing their platform. It's been very, very difficult. And there was an increased sort of blow to that advertising revenue. Wow, check out the One Vanderbilt tonight. One Vanderbilt looks fantastic tonight. Now, there was an increased blow to the advertising business, I would say, across the board. Not only at Snapchat, but at Meta too, due to Apple's 2021 privacy update. Okay, so essentially Snapchat can no longer track and trace their users across the web and serve them up digitally targeted advertising. So that put a significant dent in their entire business model. So Snapchat is trying to get ahead of this, and I actually believe they rolled out some sort of a subscription type service. Now, does anybody know how much that costs? I think it's like $3.99 a month. Is that correct? I mean, I could be wrong. I don't even have a Snapchat. I don't use the platform, but does anybody know how much the subscription service is on Snapchat? Yeah, JR says I won't touch TikTok. I agree with you, JR. I'm not a big fan of TikTok either. This is going to be JP Morgan Chase brand new high-rise. It's going to be fantastic here. Hey, we have Dusty Cole. What's up, dude? Good to see you. He says, hey, Tom, it's getting freezing out here tonight in Virginia. You know, Dusty, it's not too bad tonight. Last night was way colder in New York than it is tonight. Margot says, hey, Tom, the city looks fantastic. Thank you so much. Okay, so somebody says Google stock is down about 1.2%. Carter Hill says they are also getting eaten alive by TikTok. Brad's Brains subscription service ? Yeah, well, supposedly Snapchat, in order to get ahead of the, advertising collapse and decline, they're trying to get ahead of it by, having users sign up for a subscription service. I don't really know what they get. Again, I don't have Snapchat, so. Brad's Brain says, use Snapchat to chat with family as a group only. I had no idea there's a subscription aspect. Yeah, so I think there is. And it may be for like news. I don't even know what it's for, honestly. KB says, hot take, Snapchat will be acquired in 2023. So KB, I have a question for you. If you think Snapchat's going to be acquired, who do you think is going to buy Snapchat? Who do you think would buy Snapchat? I mean, the valuations have definitely collapsed. I think from all-time high now down to where it's trading at after hours, I think $7. It's down about 92%, 93%. Julia's like, Elon Musk is going to buy it. I think Elon Musk already has his hands full with Twitter. The dark horse is the metrics across the board are terrible. Productivity is created. All charts are dismal. Yeah, I mean, Snapchat with an absolute disastrous quarter. Now, here's the main thing that I look for in these types of businesses, okay? And it's a metric called ARPU. So ARPU. And that acronym stands for the average revenue per user. And the average revenue per user at Snapchat declined 11% year over year. So I think $3.11. Now, granted, they did manage to grow their user base. So normally your ARPU would take a little bit of a hit, but I mean, Snapchat's whole sort of story to Wall Street is, look, we deserve a premium valuation because we're a social media company, a social network, where we could grow very fast and we could grow our top line revenues very fast. Well, their whole story fell apart because for the first time since 2017, when the company went public, they have now declined to single-digit revenue growth for the first time, and decelerating revenue growth for the first time since they've been public. So now this is 432 Park Avenue, standing outside the Societe Generale. Looks like there's some sort of a catering event going on here. Kaylee says, how's their daily active user numbers? So I believe daily active users hit 363 million, and Wall Street analysts were expecting about 358 million. So they did beat on the daily active users, but at the end of the day, money's talking in this environment. And if you're not making money in an environment where interest rates are going on a one-way trajectory and that's higher, your stock is gonna get obliterated. And that's exactly what's happening to Snapchat stock, down 26% after hours. So this is a good steakhouse I want to show everybody. Bobby Vans. Yeah, Carter J. Hall says daily active users went up year over year. Yeah, you're right. Adam says people don't seem to be ready for the metaverse. Richie says, I'm new to this. I've learned a lot from your content. Thank you for doing what you do. Hey, Richie, thank you for being here, my friend. Welcome to the crew here. Julia M says, Tom, do you know of any stock history where stock has come back from this like single digits or something? Yeah, I think Amazon during the tech and telecom bust, wasn't Amazon like 2 weeks away from bankruptcy? Now I know what you guys are gonna say. Amazon is not Snapchat, and I get that. But I wouldn't personally put my money in Snapchat, and this is sort of why, I've been sort of preaching this pretty aggressively, is that if you're actively managing a portfolio, you got to manage your risk. I'm not sure if a lot of people here has probably read the Market Wizard series, the Jack Schwager Market Wizard series. And if you haven't, that's a little bit of homework, okay? For those of you who are interested in investing or the markets, financial markets, I would strongly advise you to read the Market Wizard series. And you'll notice a lot of commonalities or a lot of common traits between all of the best traders that were interviewed in that series. So just to read you off a couple notable names who were interviewed by Jack Schwager in Market Wizards. Paul Tudor Jones. You had Anthony Saliba or Tony Saliba, which he's an options trader, a derivatives trader. And you also have Mark Minervini. And the commonality between all of these traders that were featured in Market Wizards, the number one commonality you'll see is they cut their losses very, very quickly. Okay? It's sort of like that old saying. Has anybody ever heard of this saying? This is the Yale Club, by the way. There's an old saying that you cut the weeds and you water the grass, right? Cut the weeds, water the grass. So if you have a particular bull thesis on a company, right, and you buy the stock, just because you buy the stock doesn't mean the stock is going to go up. You have to have some sort of a risk parameter in place where, look, if, this goes against you by 7%, you're out. You blow the whole thing out. And as that particular investment idea starts to appreciate, then you give it gas. You water the grass, right? So a lot of the times, during bull markets, when a lot of let's say if I have an idea to buy a company or something, let's buy a stock, I'm only going to add to that position if it goes up in price, right? I'm not going to double down and average down. Think about that strategy in 2022. If at any time your investment idea went down in price, you doubled down and you averaged down, you'd probably be bankrupt right now and you'd probably be blown out. So I think it's critical to manage risk. Again, if you're buying a broad basket of stocks, right, let's say if you're just dollar cost averaging into the S&P 500 or something like that in a long-term retirement account, then yeah, I think traditional buys is great. I do that too. But if you're trying to beat the market and you have to answer to a P&L, you can't ride Snapchat down 90%. But wow, check this out, guys. So we are outside One Vanderbilt, and look at the view standing directly under it. This is just a massive building. Now, at the top of the building, there is a very famous observatory. Now, I haven't been to the observation deck here, but I think I'm gonna go. I think I'm gonna go this holiday season. Yeah, Carter Hall is like, maybe if you're a short seller. That's true, touche. John is like, Tom, go back to the Yale Club and sing 10,000 Men of Harvard real loud. Yeah, John, that'd go over real well. Hey, Austin City Limits is here. Welcome. Dan Zhang says, a typical Market Wizards book structure is the first half of the book is always the interview. With futures traders, the second half will be equities traders. Hey, Retired in Florida is here. It says, hello, Tom, thank you. Your suggestion, or it says, hello, Tom, thanks. Your suggestion or anyone's for a VPN while in Dubai and Qatar next week. So you're looking for a virtual private network? I don't know. Why do you think you? But good luck on your trip. That's going to be fantastic.
Yeah.
JR says, best line of the night so far. I'm not hanging around to find out. Yeah, you got to get out of there, man. You got to pull the ripcord and blow that position out. Oh, are the Rangers playing tonight? Well, that's going to be awesome as we walk down to Madison Square Garden. You guys will be able to see all the Rangers fans coming out. Is there a hockey game tonight? I think there may be, right? Corner Bar says, hey, Tom, you have a cold. Yeah, I still have a little bit of this pesky cold, and it's actually cold out, so I'm sniffling a little bit. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new here. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you along for the ride. Yeah, Dan's like, Tom, I feel like you've been sick for weeks now. So I think it's been about a week. Now, I would say I'm 100% better, but with work, it's just been insane. So it's sort of like, you know how you're 100% better from being sick, but you're always freaking running around, that you really don't have enough time to just take 2 days out and just relax. That's sort of where I'm at. So this weekend, I'm gonna dedicate a lot of that to sleeping. But work has been nuts. Work has been nuts. Let's just say that. Hey, Dr. Longa says, hey, Tom, I did early voting today and it was pretty busy. Isn't that crazy that October is almost gone? I mean, that's nuts. Richie, I can't give specific investment advice. Like, I can't tell you guys what to buy. We just have a broad-based conversation about the markets and the economy on this stream. We don't tell, like, go buy this. We just have a broad-based discussion. But speaking about a broad-based discussion, we got to talk about housing, okay? Because we got existing home sales data out. So the National Association of Realtors released their existing home sales for September. And existing home sales fell to a 10-year low in September, falling 1.5% from August to 4.71 million units. This marks the 8th straight month of sales declines. But here's something interesting that I think we need to keep in mind. Now, this was expected for sales volumes and sales transactions to decline, and to decline rather swiftly. We were expecting this. We've been talking about it almost every day on the stream. But where does part two come in? Well, part two comes in with the price declines. And as of now, and again, hold on, I'm not saying that we're not going to see those price declines, but as of now, we have not yet seen those price declines. And here's the reason why, in my opinion. And if we want to find that answer out, we have to turn our attention towards inventories. So in the report, according to the National Association of Realtors, they said inventories continue to drop, not go up, drop to about 1.25 million homes for sale at the end of September. That was actually down 0.8% versus September of 2021 during the massive buying frenzy. So inventories are actually going the opposite way. When everybody thinks that interest rates going up is going to cause people to sell their homes, there's going to be an influx of inventory on the market. And since nobody can afford to buy a $500,000 piece of property at a 7% interest rate, well, they're going to have to drop the price. Well, we haven't been seeing that yet. Now, I'm not saying that we won't see that in the future, but from the data we have now, inventory is actually becoming more of a problem. And if I had to give a prediction, I think we're going to start to see housing price declines in late Q1, early Q2 of next year. But what do you guys think about this? What do you guys think about that data? Do you think we're going to start to see an explosion of inventory on the market? And if so, how do you think we're going to get that inventory? Is it going to come from people defaulting on their loans? Is it going to come from foreclosures? Is it going to come from big block sales from institutional investors that say, look, I'm just going to pull the ripcord on 250 single family homes and flood the market with inventory? Like, what do you guys think this could be? What do you think it could be? Rick K says, Tom, on last night's live stream, you had asked us if we are becoming a renter nation, and I would say yes. Yeah, I mean, Rick, it looks that way, right? It looks that way because on last night's stream, for those of you who couldn't join, we were talking about single-family housing starts data that came out. And housing starts fell off a cliff. And if we think about it, here's sort of where I'm putting two and two together, and then I'll stop rambling. I know you guys hate when I ramble. So I'll give you guys a nice view of the Capitol Grill here, but here's my biggest concern, okay? We know the big issue in the housing market is a lack thereof of inventory. Well, how do we solve the inventory problem? Well, I would say build more homes. Well, a leading indicator to figure out if we're going to get more homes built is single-family housing starts. And we're seeing single-family housing starts decline and fall off a cliff. So I don't see us as a country solving this issue of a low inventory anytime soon, because we've been underbuilding for the last decade since the 2008 financial crisis. And now that interest rates are at 7%, nobody wants to build homes. So are we going to be in a perpetual cycle where inventory stays low, housing prices stay high, interest rates stay high, nobody could afford to buy, so everybody's forced to the rental market? Now, I'm not saying that's going to happen, but I think we need to sort of hear out every single possible scenario, I would say. Cynthia Beal says, Tom, do they want to solve the issue? I don't know. It's a good point. Lainey James says prefab but quality small homes. That could be a good idea, actually. Adam says every city is approving multifamily zoning in previous single-family zones. So Adam, you are correct. And from the data we got out yesterday, I was going to say last night, but from the housing data we got last night, they said that there's still extremely strong demand for multifamily development. Extreme strong demand. War Walker, I appreciate it. Hey, Sunny 3156 is 3rd Avenue. Yes, indeed, we are on the corner of 42nd Street and 3rd Ave. And we have a really nice view all the way in the distance of Bryant Park Tower. Bank of America Tower. This one is One Vanderbilt. And this one is the one and only Chrysler Building, which is one of my favorites. Joseph Hardaway is here, says, what's up? Good to see you, Joseph Hardaway. Always appreciate it. Mike C says, every economic trend seems to go the exact opposite of what I expect. Yeah, you and me both. Michael Joseph says, Tom, they need to change the zoning laws. Well, I think zoning is a big problem in California the most, right? Excuse me. I think a lot of our viewers in California would say that zoning has been a pretty bad nightmare there. All right, let me catch up on the chat. Dr. Longus says, Tom, do you think this recession is unique to other recessions? Well, I don't know. I think what's different this time, and I know you should never say it's different this time, but I think in this cycle, we're unwinding a decade of quantitative easing and extreme easy monetary experimentation. I think that's what we're doing. So Carter J. Hall. Oh, this is a good comment. Let me read this. So Carter says, Tom, I'm starting to see a lot of low income and mid income in my area of Brooklyn. It seems like every new development is low income. So you're saying like, are you talking about like affordable housing units or? Now, Carter, I think there's a program in New York, right, where you can apply for these particular units, and if you make under a certain income, then they will accept you into it. I forget what the program is called, but I'm assuming that's what you're referring to. Like if you make under $75,000, you, like those particular people are the only ones who are allowed to apply. Hey, got yours. We have people backing out of contracts like crazy right now. Tons of price reduction. Talking West Coast real estate. Yeah, I think Toll Brothers, when they reported their quarterly earnings, Toll Brothers came out and said that they had to not only give incentives for new buyers, such as, try to entice new buyers to purchase homes, but they had to give record amounts of incentives just so people wouldn't back out of their existing contracts. So I think it's a good point. Okay, this is East 42nd Street and 2nd Avenue now. I cannot believe that this is going to be an urgent care. This used to be like a big college bar, McFadden's, but it's supposedly going to be an urgent care now. Hey, Beltrix RL says, hey Tom, I am here from Brazil and love New York. Well, thank you so much for joining. I appreciate it. Wabashmud says, new subscriber here, good talk and great views. I am hooked. Well, thank you for being here. Thank you for subscribing to the channel. Thomas L, love the name by the way, says, what do you think about New York City as a whole? I've seen that they're laid of garbage disposal. Oh, they laid off garbage disposal personnel recently. I think New York itself, the economy is in trouble. Yeah, well, I think we have our problems just like any other big city, right? Now, here's what I will say, and I'm going to try to be non-biased here, because as a New Yorker, I could be very biased if I wanted to, but I won't. I think that here's my biggest gripes with the city. They've been very, very lackadaisical on crime. Okay. And depending on who you ask, they would tell you different stories about the crime. But Like, let's say if you're commuting home from work or something and you're a 30 to 35-year-old male, okay? Well, you're probably not going to have as many issues as if you're, maybe a recent, college grad, you're a female, 23, 25, taking the subways home at night from work. Those are the people that unfortunately get targeted and harassed. Also, elderly folks. There's been a lot of uptick of, crimes, steal, like theft, burglaries, robberies, assaults. But the derelicts and the criminals, for lack of a better descriptive word, they tend to single out those specific demographic, right? Elderly and female, unfortunately. So I haven't personally seen firsthand a lot of the craziness, but you hear about it on the news. Now, the only incident that we had, I think, on the stream is just someone coming up to me and just trying to steal the phone out of my hand and run away with it. But that was like a one-off incident. So that's really my only big gripe with the city, is just they've been very lackadaisical on crime. And if you're trying to force everybody back to the office, well, they have to take the public transportation system. And in order to get people back in the office, they got to feel safe coming to the office in the first place. So I think by and large, New York is a very safe city, but you just got to keep your head on a swivel, right? I think the opportunities here are unmatched, especially for like new graduates, right? I think that if you're graduating college and you could come to any city that you wanted to start a career, I would still say New York is by and large the top choice, because you have the smartest people in the world here. You have Wall Street right here, all the major investment banks, the most successful hedge funds in the world are here. You have the, big tech presence here. So I think from a standpoint of trying to build a network of people, right, very early on in your career, I think New York is still the place to do that. But I think just like every big city right now, we're just having some issues, and I think that all stems from just being too lax on crime, in my view. But look, it's just my opinion. But by and large, I think, New York is still an economic powerhouse. Hey, Joe Hernandez, what's up? Good to see you, Joe. Thank you so much, my friend. Thank you for being here. Photos from around New York. Good to see you. Hey, Teresa Diaz, thank you so much for the $2 donation. I appreciate it very much. This is, wow, 22,800 subs. That's fantastic. Well, thank you so much for the support, everybody, and Teresa Diaz. I appreciate it very much. Hey, Philip Richards is here. Says, yo, good to see you, Philip. Appreciate you being here. So we were talking about Snapchat's earnings. I'll briefly... there was one other thing I wanted to cover as it relates to the earnings report of Snap. Now, their net loss ballooned about 400% to $360 million. But if we sort of dig into that number a little bit deeper, one of the things I noticed is that their severance cost was extremely, extremely high. And that makes sense, because does anybody remember what we covered on the stream a while ago? And I think this was maybe 3 or 4 weeks ago. Snapchat, I think, laid off 20% of their workforce. And when you lay off employees, that comes with a big one-time cost. You have to pay them a severance, give them a big package. So I think that may be temporary. Now, it didn't describe what the exact severance cost was, but maybe we'll figure out in due time. Hey, Mets fans, MB. Thank you so much for the $2 donation. It says the city dirty with trash on the street, which? Yeah, I mean, there's garbage bags on the streets, I guess. But thank you for the support. Appreciate it very much. So this is the Cipriani on 42nd Street. Now, whenever we're in Miami or downtown Miami, we always pass the Cipriani as well. And that one I think is one of my favorites because it's sitting right on the water. Now, in a few weeks when we're back in Miami, you guys will be able to see the Miami live streams. And that particular neighborhood is absolutely beautiful. Hey, Wesley West. Good to see you. Here, I'll pull off to the side so I can give you guys a fantastic shot of Grand Central Station. Hey, Blues Writer is here. Says, hey, Tom, I don't remember seeing so much scaffolding when I lived in New York City. So you want me to give you the inside scoop on the scaffolding? I'll give you guys the inside scoop on the scaffolding, why you see so much scaffolding all over the place. Now, in many instances, not all, okay? I understand this is not all, but many instances, the reason why you see scaffolding in one place for a prolonged period of time is because periodically, New York City will do building code inspections, and if the building is not up to code, or like the facade of the building is not up to code or something like that, they'll either fine the landlord or whoever owns the building and say, look, you got to fix this by this time or this date, or you got to put scaffolding up. So the landlords and the people who own the buildings don't really want to come out of pocket and pay that big expense. So instead, they'll just leave the scaffolding up for years. And this has been a big, big issue, especially on the Upper West Side, because people have been saying, look, some of these building owners have been leaving this scaffolding up for years, 3-4 years, just to delay and sort of kick the can down the road, if you will, by not having to do the repairs. So that's one of the reasons why you see it. I think another reason is just in many areas in New York, the buildings are very old, right? You could have, buildings that were built in the late 1800s, early 1900s, and that requires a lot of repair. Now, obviously here in Midtown Manhattan, you see all the new glass buildings. But if you go to the Lower East Side, if you go to Soho, the Upper East, the Upper West, you're gonna see a lot of the original railroad style buildings, the original brownstones, and those need a lot of work and upkeep. So, Carter J. Hall says, Tom, do you think New York City has an infrastructure problem? I think the United States has an infrastructure problem. But that's just because, if you think about when the majority of the main infrastructure, the bridges, the roads, the tunnels, I'm gonna let it slide. The tunnels were built in New York City and in the United States. It was a long time ago, so I think they, need obviously a lot of repairs. CM says, Tom, have you been taking clients to Cipriani? No, I haven't actually. Now, my main go-to place to take clients to, I'm blanking on the name of the steakhouse. We always pass it on the stream. We're actually going to pass it here in just a minute. Elsa's here, says, hey Tom, how are you? I'm doing good. Hopefully you are well. We are walking right here at the EY building. But we're actually gonna make a left, and I'm gonna show you guys Library Way. Julius's Sparks Steakhouse. No, it's not Sparks. I always forget the name. I don't know why, and I go there all the time. Not anymore, but it's Del Frisco's. That's what it is. Del Frisco's Steakhouse. But if you guys enjoy the type of conversations we have on the live stream as it relates to the financial markets, the housing market, if you do scan the QR code on your screen and punch in your email, I write a free investing newsletter on the US equity market, emerging markets, fixed income, and the like. We try to send it out every other Tuesday after the market closes. So if you punch in your email, you'll be signed up to receive it. And also, if you want to follow us on Twitter, you can follow @WalksWallStreet for more intraday financial information and news. But aside from this Tesla here, which is beautiful, what's even more beautiful is the Stephen Schwarzman building, which is the New York Public Library right here. And this is actually called Library Way. But if we point the camera a little bit higher, you'll actually see the Salesforce Tower. Now, Salesforce is a big enterprise software company. The CEO is Mark Benioff, ticker symbol CRM. And Salesforce has been one of those companies where they are not requiring their employees to return to the office at all. They could actually work from wherever they want. So you have that big building, not many people in it. There's a Whole Foods in the bottom of the building. CM says, Tom, talk about commercial real estate. Yeah, we could talk about that. Now, here's an interesting thing. Does anybody, and I always mispronounce the gentleman's last name, but he is a CNBC anchor, Carl. I always forget how to pronounce his last name. I apologize, but I think he's a good person to follow on Twitter. Gives very insightful information and data. Now, one of the things that he tweeted today was in relation to the big consulting accounting firm KPMG. I'm sure many of you have heard about it. Now, KPMG, here, just let me turn around. I'll give you guys a shot of the top of the Empire State Building. Now, KPMG is officially leaving their office, their main flagship office on Lexington Avenue. And they are now going to be in the beautiful Hudson Yards. So you're seeing a really, really interesting thing happen in New York. You're seeing big consolidation into what I like to call Class A real estate, right? The big Class A, big brand new apartment buildings. And all of the other units, like pretty much everything, and I'm not exaggerating, is completely empty. So a lot of these office buildings that you see as we're walking, doing the live stream, a lot of them are empty. You know, there's even some big big office buildings in the city that have like 90% vacancy. And I think that's probably due to the pandemic, right? You still have a lot of people working remotely, but the big companies that are still here in the city that require their employees to return to the office, they're migrating away from these very old, maybe oldish style office buildings and into like the brand new prime real estate, such as the Hudson Yards, what we just passed before. JP Morgan Chase is building a brand new office building on Park Avenue. So I think it's going to be a very interesting opportunity potentially down the line to convert a lot of these empty office buildings into apartments. Now, we are already seeing this happen in Lower Manhattan. I'm not sure if anybody's familiar with the building 95 Wall Street. Now, if I'm not mistaken, I believe back in the day, 95 Wall Street may have been occupied by Citigroup, I think. You could fact check me on that. But there used to be many offices in 95 Wall Street. They gut renovated the entire thing, and now it's luxury apartments. And I think you're going to see that trend continue in New York. I think you're going to see that continue. But in my experience, like today, the city was rocking. There was so many people in the city today. And one of the things I noticed is that it seems as if everybody comes into the office on Tuesdays and Thursdays. Now, Mondays are dead during the day in Midtown Manhattan. And usually Fridays are too. It seems like the 2 days that everybody's decided to come into the office is Tuesday and Thursday, from my experience. Yeah, Mark Francis is, luxury apartments. Yeah, I think the average rent at 95 Wall Street, maybe about $3,000. Now, you could probably get it for a little bit less if you're talking about maybe like a studio or something like that, but 1 bedroom, 2 bedroom, very expensive units. Now, to the left of us is Bryant Park, right here. And they are just setting up the Winter Village. I'll give you guys a shot. Richie says, Tom, please give a shout out to my manufacturer company, Horribit Systems Inc., located in Long Island. Manufacturing in America is making a comeback in 2023. Love that. Love Long Island, New York. Which town in Long Island, if you don't mind me asking? Yes, Stephens is seeing the Rangers fans. Now, I'm assuming the game is over. Maybe the hockey game is over now. Hey, planes and palm trees. Says, good evening, Tom and all. Hello from chilly Toronto. Temperatures are warming up though tomorrow. Well, that's good. I think it's going to be a nice weekend here in New York. Maybe potentially get up towards the 70s, hopefully. Now, for the people who are just joining, I want to read a very important statement from the CEO of Snapchat that he made on the earnings call. And I think this is really going to set the precedent for this earnings season as it relates to Meta. So Meta, or Facebook, which is Mark Zuckerberg's company. They report next week. And I think the Trade Desk too. So all like the big advertising social media companies are down after hours, along with Snap. Now, Snapchat got clocked after hours, down 26%. And here's one of the main reasons why. Now, I understand that their revenue growth is decelerating quarter over quarter, year over year. But here's what the CEO said. I'm gonna cross the street because I'll show you guys Rockefeller Center. He said, all of our advertising partners across all industries, so this is broad-based, have communicated to our team that they have decreased their advertising and marketing budgets materially for fiscal year 2023. So if you think about Meta, if you think about Snapchat, their entire business is based upon advertising, right? How do you think you get to use these services for free? It's because they run ads. So this could be a warning that Meta's earnings is going to miss big, potentially. Now, I think this also may impact Alphabet, Google, YouTube. Because how does YouTube make a lot of their money? They make a lot of it through advertising, right? I'm sure many of you, before you clicked on this live stream, many of you may have either seen an advertisement play at the beginning of the live stream, or many of you maybe have not because you subscribe to YouTube Premium. But I think advertisers in general are very, very, I would say, on edge as we go into an economic recession. They're trying to rein in their advertising dollars, their advertising spend. And I think it's very concurrent with this economic slowdown we're having. So we're standing outside the Bank of America Tower here. And check out the Empire State Building. I'm gonna give this a 9.8 out of 10. This is a fantastic color. Now, I'm not sure why it's lit up in blue, but it looks great. Marcy says, does anybody have YouTube Premium here? I would be curious to that as well. So who here watching the live stream subscribes to YouTube Premium? GN Workstations, is this because of the Yankees? Maybe. CM says, did Tom recommend Salesforce stock? I don't recommend any stocks. Fidel Cash Flow says, I do. I can't so when we talk about specific stocks on the channel, I'm not recommending these to you guys. We're just talking about them broad-based. I can't recommend any securities. DM says I do. Wesley West says no. Andreas says yeah. So for the people that do have it, is it worth it? Do you think YouTube Premium is worth it? Like, what do you guys think? Austin City Limits says nope. Michael says Google/Alphabet is a hardware and true tech company that has multiple revenue streams, unlike Snapchat. Yeah, I wouldn't go as far to say a hardware. But look, I mean, you have the Google Cloud division, you have Google Search, but I think those are the main two. Now, Google's cloud computing division is losing money, but here's the key thing. They're losing less and less money every single quarter. Now, when we talk about companies like Amazon, when we talk about Microsoft and Google, those big three, the number one thing I like to focus on is their cloud computing. So when you talk about Amazon, you talk about their AWS. I think their AWS business alone over the next decade is probably going to be a little bit less than a $1 trillion business just in AWS alone. When you think about Microsoft, think about Microsoft's Azure cloud computing unit, and then obviously Google's Google Cloud. But yeah, Snapchat I don't even think you could compare Snapchat to like Alphabet at all, to your point. I know Google has like the Google Pixel, right? That's considered hardware. Google has Google Glass, but I think that in terms of overall revenue, it probably makes up less than 5%. Yeah, Carter Hall's right. It says AWS is the biggest earner. Now, did anybody watch Jeff Bezos' interview about AWS? If you haven't, I would really recommend watching it. It's a fantastic interview. And it's all about first mover advantage. And one of the things he says is that if you're lucky enough to have a first mover advantage for 5 years, you're probably going to maintain the leader. And I think that's exactly what happened with the AWS business, which is a very lucrative business for Amazon. Joseph Hammocks is 100% worth having premium. Yeah, I mean, look, I think it's very telling. You know, Google ticker symbol GOOG is down after the bell. Meta is down after hours, all off the back of, I think, that one statement from the CEO of Snapchat, which they're saying, look, advertising revenue is gonna decline. People are slashing their marketing budgets. Now, speaking of advertising revenue, I have been getting, surprisingly, there's been quite a few companies that have actually reached out to me for advertising opportunities on the podcast / live stream, whatever you want to call it. Carter J. Hall says first mover advantage. That's exactly why AWS and Apple are at the top. Yeah, I mean, Carter, that's a good point. It's definitely a good point. Carter, that reminds me of, and I think I've said this before. Does anybody remember when the iPhone first came out? This is like the first iPhone release. And what was the talk show that Matt Lauer was on? Was it the Today Show or was it Good Morning America?
Crazy.
I think it was the Today Show, right? Matt Lauer? Anyway, again, you guys get the point. But Matt Lauer on I'll just say talk show because I forget. He was explicitly saying, why would anybody want to use an iPhone? Who would want to have the internet and email on their phone when I have a BlackBerry? I have a keyboard, right? And this is what BlackBerry execs were saying. They're like, look, iPhone will never penetrate into the business suite because business people want to have their keyboard. And look what happened. If you go to any Fortune 500 company that provides corporate devices, I could almost guarantee they're an iOS shop. I mean, I would probably go as far to say 90% of the C-suite, or I would say the Fortune 500 runs an iOS shop. Tariq Khan says BlackBerry sucked. Well, I mean, for a time it was very popular. Very, very popular among business people. Got Yours says, hey Tom, I used to own an online marketing company in a Derek. I started way back in 2007 to 2009, and we got killed in that recession because the first thing that goes is companies' advertising budgets. Yeah, it's a good point. And Meta, I think, is down like 75%. Holy shit. I think he just stabbed that guy. What the frick? I think I may have to wrap. Jeez. Oh, Aaron says you had a sidekick? Yeah, I think they're just homeless guys fighting. I don't want to get involved in that.
Yeah. It's like, oh, I'm shot now.
Dark Horse says, Tom, go back and help him. No, dude. I don't want to get involved in that. Yeah, around that area you have a lot of, unfortunately, homeless infighting. Michael says BlackBerry started the texting revolution. Now, a company that is essentially just reselling SMS is a company called Twilio. And Twilio is down, I mean, significantly. I think the company's market cap has been more than cut in half. But Twilio is sort of like a communications as a service, like platform company where you could send out mass text messages, alerts. I think there was another company that specialized in like emergency alert texting, which would be like in Everbridge. Anybody familiar with that company, Everbridge? Elliott Wave Review, thank you so much for the donation. This is BlackBerry dominated the business/government market for a long time, but made a bad business move and lost their edge. They had a great device. Yeah, I think it just goes back to saying, you know, if you don't innovate, you'll die, right? I think that's a very good point. You know, they didn't want to innovate, and thus they go by the wayside. So I think you're right, Elliott Wave Review. But thank you for the donation. Thank you for the support. I appreciate it. All right, so for everybody in the chat advising me to go back and do something, I'm from New York. You guys aren't. This stuff happens all the time, and these are homeless people fighting, and I'm not getting involved. So, stop. All right, so now we are at 36th Street and Broadway. Tariq says yeah, I think a lot of the non-New Yorkers in the chat may be surprised, I guess, but unfortunately, we have a big homeless issue in the city, and these people go at each other and fight each other all the time. Now, if you may live in suburbia, you're from the suburbs, you may think, oh my gosh, this is like insane. This is like a normal everyday occurrence, and I'm not getting involved with grown men disputing each other. So they're in a group. If those two men want to fight, that's their business. It's not mine. And just by the look at the two individuals that were fighting, they were, you know, probably, in my view, homeless and drugged out in a group that is a very, very big hotspot for that. So I'm pleased with the comments about, you know, getting involved. Let's just let it die down, please. Friendship Light says, Tom, have you ever discussed why you stopped the skateboarding on the streams? Yeah, I think it's because everything has gotten back to normal, right, as it relates to the traffic. So if you remember when we were doing the skateboarding streams, there was literally no cars in the city. There was nobody driving. Right, so we could skateboard and ride bikes around the city all the time, but things have pretty much gotten back to normal as it relates to car traffic. So to be doing this on the skateboard, I think is a little dangerous, and I've noticed that a lot of the drivers are very, very aggressive, I should say, and I think it may be just like a safety issue, safety risk. Andreas, I agree with you, Tom. Happens there all the time. Yeah, and we've seen, unfortunately, seen much worse on the live stream. I know, Lainey Jane says it was fun skating around. And I sort of don't, so I'll just say one last thing and then we gotta stop talking about it. But I think in things like this, like, you guys have to understand and sort of respect my point of view, right? I do these live streams for everybody live, okay? And, you know, the stream has grown to the point where some nights we could have over, 800 people concurrently in the chat, knows where my location is, everything, every night. So, I don't want any sort of backlash from if we catch something on tape and then that gets reported to the police. I don't want these people coming back to me. I don't need the problems. So just please respect that aspect of it too. We do these live, so people know where I am. So. Yeah, Blues Writers, like, where's FredEx when you need them? So true. But if you look all the way in the distance, you can see the One World Trade Center. Mr. Wonderful is here. Good to see you. Deep Value Alex is Tom, when are you headed back to Miami? Well, I should be back November 1st. I should be back November 1st. So I rented out my property for a month-long rental on Airbnb. And I think that's going to be the new strategy as it relates to my rental, because here's what I found out. It takes the same amount of effort, the same amount of time, and the same amount of money as it relates to paying for, cleaners, to rent my place out for an entire month than it takes to rent my place out for like a weekend. So I think I'm only going to be doing month-long rentals. So I would say longer term base rentals, maybe 30 days or more. That's what I would say. But check this out. This is a beautiful view of the Empire State Building as we are coming close to Koreatown here. So I should be back in Miami November 1st, but I would say about a 95% chance. Hey, Gail Arnold is here. Good to see you. Yeah, Jordan Fields, I agree. All right, so we're gonna do one lap around Koreatown. This is 32nd Street. Hey, Zozo Bob, what's up, man? Good to see you. Thank you for joining. Zozo Bob, we were talking about Snapchat's earnings tonight. Stock's getting hammered after hours, down about 26%, excuse me, after hours. With the CEO warning that from a broad list of advertisers, they're all slashing their marketing budgets. And then we also talked about the National Association of Home Builders reporting egregious existing home sales data. Monique says, Tom, do you double your rent with the winter price for seasonal? Yeah, so Monique, that's a very good point. You could definitely command higher rents for seasonality, right? So what I've found is more people, there's a lot more demand for, let's say, short-term rentals in the Miami, Fort Lauderdale, Miami-Dade market during the winter, right? Or leading up to the winter. I guess you could call them snowbirds. But so here's my sort of train of thought on that, right? Because I would rent out, my home is a legal 2-family, right? It's legal 2-family because I converted the sort of Florida room. I'm sure everybody knows what a Florida room is, like kind of mud room. Now, the good thing about the layout of my property is there's 2 main entrances, but there's a divider wall between one entrance, and there's like a little studio type thing and a bathroom, right? So you could rent that out separately. So I was renting that out a couple times individually for people that wanted to stay for 3 or 4 days, something like that. And it was working well. It was very profitable. But here's the only issue. When a tenant or a short-term rental guest moves out, obviously you have to clean the property, and that was getting a little bit, time-consuming. Yep. So to which point I would actually pay like a cleaner $50. They would clean the entire thing. But what I found is, if you look for 30 days or longer, let's say 30-day to 60-day rentals, you're going to get actually higher quality tenants. So here's the description of the tenant that's in there now. It's actually a family, right? Where I don't know if it was either the husband or the wife, they had the option to work remotely for 1 month out of the year from wherever. And they chose Miami, Florida, right? It's a nice place. My house is not too far away from the ocean, from the beach. And I think they have 2 kids. So would you rather cram your entire family into a hotel for a month? Or would you rather just rent out an entire house where you could get a rental car, you could park in the driveway, you could have the kids run around in the backyard, and you just have like an actual home to live in? You know, the kids each have their individual bedrooms, and you could cook meals and things like that. Or would you rather, get a hotel room for your entire family? I don't know. I think once you have kids, maybe it's a little bit better, especially for longer term, to go the Airbnb route. But I don't know. What do you guys think? Would you rather rent out a hotel with your entire family or a house if you have little kids? I don't know. Warwalker's like, Tom, get ready for a disaster when you come home. Yeah, I'm probably gonna come home to like crayon drawings on the wall, but doesn't matter. I'll just have to cross my fingers, Warwalker. Wow, check this out. Hey, we have the one and only Lady O. What's up? Lady O is our moderator from New Jersey. Good to see you, Lady O. Happy Thursday. Steve CR says the folks around me do Airbnb. Nice. Hey, Gary Carpenter, thank you for joining, since I might hit the hay early. Monique says hotel is $3,000 a month and no stove. Well, I think it depends on what kind of hotel you're in, but I definitely understand that. Especially if you have little kids though, right? I mean, even if you get two beds or something like that, isn't it a little bit, I don't know, tedious for 30 days living in one room with the kids? Hey, Yvonne says my sister did that last year in Florida. She works for Los Alamos National Labs. Wow, that's cool. So did they rent, Yvonne, did they rent like an Airbnb, a house? Look, I think it's a good deal. So I think that's what I may do. And you sort of get a different type of tenant too. Than maybe just like a one night, person that wants to do one night. Les says Tom's legs probably look like Popeyes. That's hilarious, dude. Tariq says, I rent houses with pools in Fort Lauderdale and Boca Raton for 30 days at a time with me and my 2 kids. Very cool. Both me and the wife have always worked remote. Yeah, it's a good deal. Now, one of the biggest, I would say, from what I've seen, issues with Airbnb are all of the egregious miscellaneous fees. Has anybody noticed that if you try to book an Airbnb, you get a cleaning fee, this service fee? But I think that's up to the, I guess, the landlord or the listing person to actually throw the fees in there. I put a flat $50 cleaning fee and nothing else. $50 cleaning fee for a month? I think that's fair. I think that's more than fair. $50 for the month, entire month, $50 cleaning fee. I think that's more than fair. But team, if you are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you are new. We do these live streams about 5 days a week between New York City and Miami while discussing the financial markets, and we'd love to have you along for the ride. Fun feeds, as I know someone who lived in a hotel for 2 years. Wow. John Jesus, I'm retired. I'd rather sleep on the beach. Yeah, the dark horse is like that fee needs to be $150. Well, I think the reason why I did it $50 is because I've been seeing on Twitter a lot. So if you guys want to connect with us on Twitter, you can follow @WalksWallStreet on Twitter. Now, a lot of people, mostly Airbnb shorts, people who are shorting the stock. Oh, check out this dog. This thing is so mini. Beautiful dog, by the way. A lot of people are complaining about all the fees. There's a cleaning fee, there's a service fee, maintenance fee, and the fees could add up to as much as the rental. So I'm gonna look, I'm not doing any of that. So I'm like, I'm going to look at all of the competing listings in the neighborhood, and I'm just gonna undercut them all by $200. And no fee. So undercut everybody in the neighborhood by $200 and a $50 cleaning fee. And I have 30-day minimums. You could only rent the property for 30 days, a minimum of 30 days at a time. It's worked out well so far. Hey, Aspillion Loda says, this has been really interesting to watch and listen. I've got to go now and look forward to seeing more streams. Have a good night. Well, thank you so much. I think I got to run too, because the phone battery may die. It's on like 7%, and I need it for the LIRR ticketing app. But thank you guys for joining tonight. We covered Snapchat's earnings, and we talked about the housing market. If you liked the conversations, once again, if you scan the QR code on your screen, punch in your email, you'll be signed up to receive the free Behind the Street newsletter that I write about the US equity market, emerging markets, fixed income, all that good stuff. So please join us over there. But until then, we will see you tomorrow, 8:30 p.m. Eastern time, Friday. Oh my God, already Friday. We're gonna have to do something cool on tomorrow's live stream. Maybe we'll go to the High Line. I don't know. Stay tuned. All right, everybody. Thank you so much. I appreciate it. Derek, Steve, Abdullah, Muhammad, Alex, photos from around New York, Marcy, the Dark Horse, thank you, Derek, War Walker, Joan, John, Dusty Cole, Rachel Abreu, JR, Wendy England, Lady O, Marcella, into the Mighty Bull. Have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. I'll see everybody tomorrow right here, 8:30 Eastern time. See you tomorrow.